All right, let's talk about Avarga Limited. We're going to dig into their latest full-year results, and from an investor's point of view, well, the numbers are telling a really interesting story. Let's break it all down.
So, check this out. It's really a tale of two halves. For the full year, net profit took a nosedive, down a huge 46%. But, and this is a big but, if you just look at the second half of the year, profit was actually up 38%. So, what's the deal? Was it a terrible year, or did they pull off a strong finish? It's kind of confusing, right?
And that's the big question we're here to answer. We've got to peel back the layers on these headlines and really figure out what's going on behind the scenes to cause such a confusing result.
Okay, so here's how we're going to tackle this. We'll start with the big picture numbers. Then we'll check out the revenue story. After that, we'll decode that crazy profit drop, and once we've figured that out, we'll do a quick financial health check and see what the future might look like for them, especially with the housing market.
All right, first things first, let's get a high-level look at how they did this year.
And whoa, there it is, that headline number in black and white. Their full-year net profit got cut almost in half. It went from over 36 million Singapore dollars all the way down to just under 20 million. You see a 46% drop like that? I mean, that's a huge red flag. We've got to figure out what happened.
Okay, so when profits tank, the first thing you usually look at is revenue, right? Did their sales just completely fall off a cliff? Let's see what the revenue story tells us.
And, well, the answer is no, not really. The revenue only dipped by about 4%. I mean, a drop is a drop. It's not great. But a tiny 4% dip in sales absolutely does not explain a massive 46% crash in profit. So the real story is hiding somewhere else. We got to dig deeper.
And part of digging deeper means understanding what Avarga even is now, because they've made a huge shift. They've gotten rid of their paper mill business completely. That means today they are 100% a building products company. That's it. And remembering this laser focus is going to be key for the rest of our analysis.
All right, now for the main event. Let's solve this mystery of the disappearing profit. And here's a hint. The answer isn't in their normal, day-to-day operations. It's all about a few big, one-time events.
Yeah, the real story for this year has nothing to do with sales trends. It's all about some major non-recurring financial events. Think of it like a tug-of-war on their profits. Let's look at the things pulling it down and the one thing pulling it back up.
First, the biggest drag on profit, a whopping $19.1 million impairment charge. Now, this isn't cash leaving the bank, it's more of an accounting thing. It's basically the company saying, you know that US subsidiary we bought? Turns out it's not worth as much as we thought, so they have to write it down. It's a big paper loss, but it hits the bottom line hard.
And then boom, another huge hit. And this one was real cash. A one-time tax bill for $18.6 million. This was for moving dividends from their Canadian subsidiary. So just like that, you've got two massive, unusual expenses just hammering their profit.
But wait, here's the twist. This is what explains that surprisingly good second half. They had a big one-time gain of $16.2 million. And where did that come from? Selling off the property from that paper mill they shut down. So now you see the full picture, right? Two big one-off losses, one big one-off gain. These three things, that's the whole story behind the crazy up and down profit numbers.
Okay, so I think we've cracked the case on the profit mystery. But that's just one part of the story. What about the company's overall financial health? To figure that out, we need to look at the balance sheet.
And wow, okay, looking at the balance sheet, one number just jumps right off the page. Their total assets fell a lot. We're talking a drop of around 180 million Singapore dollars in just 1 year. That is a massive change. So the question is obvious. Where did it all go?
Well, it boils down to three main things. First, and this is the biggest piece, cash went way down. Why? Because they paid out a gigantic $109 million dividend to their shareholders. Second, remember that impairment loss we talked about? Well, that shows up here too, as a write-down of goodwill and intangibles. And third, with sales down a little, the amount of money customers owed them also went down. It all adds up. So that's the story of the past year. Now let's pivot and look ahead. Now that Avarga's all in on building products, what's the future going to look like for them?
It all comes down to something pretty simple, actually. Because they've streamlined their business so much, Avarga's success is now completely tied to one thing: the North American housing market. If people in the US and Canada are building and renovating homes, Avarga does great. If that market cools off, well, so does Avarga.
And looking at the forecast right now, it looks like there might be some headwinds.
Take this quote from the Canada Mortgage and Housing Corporation, the CMHC. They're predicting that housing starts in Canada are going to decline. And you know what? The story's pretty much the same for the US market. So for a company that relies so heavily on this sector, that points to some challenges on the horizon.
So let's wrap this all up. What's the key takeaway? On the one hand, Avarga did a great job cleaning house and focusing on what they do best, building products. But on the other hand, this new, leaner company is sailing right into what looks like a cooling housing market in North America. The big question for any investor has to be, is being more focused enough to power through a tougher market? That's the real test.
This content is intended to serve strictly and only as an informational, independent, objective summary of recent events and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.